Okay, so PS 34 deals with the standards for the preparation of an interim financial report. So we already know that the frequency of reporting for a complete set of financial statements may be done annually, but if we need information about the current standing of the company as of a particular date or as of today, or we need it for reporting to the board of directors or to supply information on the recent nato nga performance in the past past 3 months, past month, any period that is shorter than 1 year is considered as an interim period, and the financial statements that we prepare for an interim period or a period that is less than 1 year is called as an interim financial report. So we can prepare that type of report depende sa ato ang need. So what is the scope of PAS 34? So PAS 34 deals with the interim financial reporting. And before we will proceed to the contents of PAS 34, so let's get to know some terms that will be used throughout the standard. So we have the interim reporting or interim financial reporting. That is the preparation and presentation of financial statements for a period less than 1 year. So this is already mentioned a while ago. And then PS 34 prescribes the minimum content of an interim financial report. So the interim period refers to a financial report or financial reporting period that is shorter than a full financial year. And an interim financial report is a financial report containing either a complete set of financial statements under PS1 or a set of condensed financial statements. So that would be under the standard PAS 34. So the PAS 34 prescribes the minimum content of the interim financial report and the principles for recognition and measurement of in a complete or condensed financial statements for an interim period. However, PAS 34 does not require entities to provide interim financial reports. So PAS 34 applies if an entity is required by government, securities regulators, stock exchanges, and accountancy bodies, or the entity elects or chooses to publish an interim financial report in accordance with PFRS. So it is not really mandatory, so it depends on the company. Okay, or if it is required by a separate organization or government agency. So interim financial reports may be presented monthly, quarterly, or semi-annually, but the most common is the quarterly reports. PS34 encourages publicly traded entities to provide at least semi-annual interim financial report and publish it not later than 60 days after the end of the interim period. Okay, it is encouraged but not required. So what is the content of an interim financial report? So an entity presenting an interim financial report has the option of complying either with PAS1 for a complete set of financial statements or PAS34, a condensed set of financial statements. So, accordingly, pwede tang mo publish og kompleto gyud like it is a full year, murag full year nga report. Ang format niya or ang yahang mga requirements i-follow nato ang PS1. Pwede na siyang i-apply sa interim financial report or pwede sad nato siyang i-condense ang financial statements. So kaning PAS 34 provides the guidelines on how to prepare a condensed set of financial statements. Again, Pwede tang mamili, gusto ta og comprehensive, so according to PS1, or pwede pod condensed, and we will follow PS34 when we prepare interim financial report. So condensed means an entity needs only to provide the minimum information required under PS 34. Each of the headings and subtotals in the entity's most recent annual FS is required, but there is no requirement to include greater detail unless this is specifically required. However, an entity is not prohibited from publishing a complete set of financial statements in accordance with PAS 1 in its interim financial reports. Again, this is already mentioned a while ago nga the entity can apply the rules in PAS 1 even if it is just an interim financial report. Furthermore, an entity is also not prohibited from including in its condensed interim financial statements information that is more than the minimum line items or selected explanatory notes. So if you want to go beyond the minimum requirements of PAS 34, pwede kaayo. Okay, kung ganahan ta nga kompleto gyud siya. So what is a complete set of financial statements under PAS 1? Okay, so we have the statement of financial position, statement of profit or loss and other comprehensive income. We have statement of changes in equity, statement of cash flows. We have notes comprising a summary of significant accounting policies and other explanatory information. Then comparative information in respect of the preceding period and statement of financial position as at the beginning of the preceding period. So this would be the contents of the uh, complete set of financial statements. So we can prepare this one even if it is an interim financial report version. Even if pila ra ka months ang covered, pwede nga ingon ani pod ang atong i-prepare. But according to PAS 34, pwede ra man sad ta mo prepare og condensed set. So unsa man ang sulod sa condensed set? So condensed statement of financial position, condensed statement of profit or loss and other comprehensive income, presented either as condensed single statement or condensed separate income statement, and a condensed statement of comprehensive income, then condensed statement of changes in equity, condensed statement of cash flows, and selected explanatory notes. So what are required disclosures with PFRS? Accordingly, for interim reporting, so PS 34 paragraph 19 provides that if an entity's interim financial report is in compliance with PFRS, such fact shall be disclosed. An entity shall not describe an interim financial report as complying with PFRS unless it complies with all of the requirements of each applicable PFRS. So if you can recall, sa lesson sa PFRS 1, di ba? Matawag lang nato nga hing-adapt gyud sa PFRS if we follow all of the requirements and all of the guidelines nga nasa sud sa PFRS. And what are the selected explanatory notes? So these are designed to provide an explanation of significant events and transactions arising since the last annual financial statement. So PAS 34 assumes that financial statement users have an access to the entity's most recent annual report. So what are the selected explanatory notes? So if needed, if these are significant in order to understand properly the condensed interim financial report, so these are examples of disclosures that are required. Okay, again, if significant. So we have write down of inventories to net realizable value, recognition of loss for impairment, reversal of any provision for restructuring, acquisitions and disposals, commitments for purchase of PPE, litigation settlements, corrections of prior period errors, changes in business or economic circumstances that affect fair value of financial assets and liabilities, loan, default or breach of loan agreement or covenant, related party transactions, transfers between levels of the fair value hierarchy, changes in the classification of financial assets, and then contingent liabilities and contingent assets. So here is an example of a condensed consolidated statement of profit or loss. So this is how you're going to present it in a condensed form. Of course, there are related notes here. Wala na siya na ako gi-show. So if it's condensed, so not all of the requirements in PAS1 will be followed. So, kung condense ato ang gamiton, so we're going to follow the minimum requirements lang sa PAS34 kung unsa ra ang required niya nga i-appeal. But again, we can include everything that is found also in PAS1. That's why natin option unsay atong gamiton nga standard PAS1 ba or PFR PAS1 or PAS34. Then this is also an example for a condensed consolidated statement of comprehensive income. Okay, so this is the profit. Gikan na siya ani. Okay, because this is a statement of comprehensive income, so mo na nga mag-add ta og mga other comprehensive income items. And then you can get the total comprehensive income for the half year. So this is a half year nga financial statements nga in interim format or interim siyang version. Then for the balance sheet, so we have here assets and then liabilities and then equity. So mura ra gyapon siya og complete set of financial statements, comprehensive na financial statements, but dili tanan nga requirements sa PAS1 would be required in PAS34. So gitagag option para dili kaayo daghan og trabahoon nga anyway interim man na siya nga report, dili pa man gyud na siya whole year. So dili tanan nga requirements for presentation or inclusion, pwedeng dili sa nimo i-appeal. Mao na nga na ay minimum requirements si PAS 34. But again, if you want to include everything, so you can follow PAS 1. So how often are we going to present or prepare the interim financial reports? So PAS 34 does not mandate which entities are required to publish the interim financial reports. So wala gi-identify kinsa naman tong mga companies nga required nga magamaana. So wala na siya gi-mandate. How frequent? Because the company has the option o kanus-a sila mag-prepare ana. Pwedeng monthly, pwede siyang semi-monthly, pwede po siya quarterly or half a year, or how soon after the end of an interim period. So wala na siya gi-mandate sa PAS 34. Hinghatag lang siya guidelines kung unsa man ang mahimong minimum content or minimum requirements. So in the Philippines, the Securities and Exchange Commission and the Philippine Stock Exchange, however, this is a separate organization. So they require entities covered by the reportorial requirements of the revised Securities Act to file quarterly interim financial reports within 45 days after the end of each of the first 3 quarters. So again, PAS 34, wala siya mandate kung kanusa, but depends on the government agencies or mga independent agencies kung asa na belong ang company or asa man siya na classify, depende adto kung naa sila requirements. So kung naa sila requirement for filing an interim report for a specific period, then that company should follow. So in the case of the SEC and PSE, so dapat maka-file sa interim financial report on a quarterly basis within 45 days after each of the first 3 quarters. The SEC also requires entities covered by the Rules on Commercial Papers and Financing Act to file quarterly financial reports within 45 days after each quarter end. Kani quarter end tong isa first 3 quarters. Entities that provide interim financial reports in conformity with PFRS shall conform to the recognition, measurement, and disclosure requirements set out in the standard. So, what would be the presentation requirements for comparative interim statements? So, for the statement of financial position, you're going to show the statement of financial position at the end of the current interim period. So, if that is for the first quarter, then after the first or at the end of the first quarter, na SFP, and also the comparative statement of financial position at the end of the preceding year. Okay, so i-present po nimo tong end of the preceding year man. So end of the year. Ang imo i-present sa imong sa current is end of the interim period chosen. So kung quarter siya, end of the quarter. But on the comparative, dapat end of last year. Okay? End of last year. So that's a whole year. For the income statement, you're going to show the income statement for the current interim period and income statement cumulative for the current financial year to date, comparative income statement for the comparable interim period of the preceding year. So, kung first quarter siya, this year, so at the end of the first quarter po, last year. And comparative income statement cumulatively for the comparable financial year to date of the preceding year. So, kani siya pares kaning A o C. So, kaning current, ya comparative, ya kanipod, current po ni siya, nga cumulative for the current financial year to date o comparative po niya nga version. For the statement of comprehensive income, you're going to show the statement of comprehensive income for the current interim period. So, sa karon nga period. And then, statement of comprehensive income cumulatively for the current financial year to date. Okay. Then, we have comparative statement of comprehensive income for the comparable interim period of the preceding year. So, kung first quarter, karong tuig as of the end of first quarter pod last year. Then, kanipod pares ani comparative version aning letter B. Then for the statement of changes in equity cumulatively for the current financial year to date and the comparative version niya of the comparable financial year to date of the preceding year. Then for the statement of cash flows cumulatively for the current financial year to date and the comparative statement of cash flows for the comparable financial year to date of the preceding year. So, current year, then last year. So, illustration for half yearly. So, semi-annual, tunga sa tuig. So, if an entity publishes interim financial reports half yearly, the following comparative financial statements are presented on June 30, 20x1. So, 20x1 is our current year. Sorry, this is not 20x1. So, this is 2020. 2020 ang date. Okay, so balance sheet, for example, for the statement of financial position, that will be dated on June 30, 2020. So, this is our first year. And then the last year, di ba, itong giingon sa requirement for statement of financial position, that is for the whole year as of the preceding year. So, kutob December 31 sa last year. For the statement of comprehensive income and the statement of profit or loss were applicable for 6 months ended. So for the current year, so good for 6 months. So that's January to June 30. And comparative pod ang atong present. So as of June 30 pod last year. For the statement of changes in equity, so good for 6 months, ended June 30, 2020. So this is our year. And then current year. And then last year, June 30, 2019. For the statement of cash flow, so same sa statement of changes in equities as of June 30, 2020. And then for the comparative as of June 30, 2019. So sa last year. Another example for quarterly. So for example, if an entity publishes interim financial reports quarterly, the following comparative FS are presented on June 30, 2020. Okay? Quarterly ni siya. So, quarterly ending on June 30. So, balance sheet at June 30, 2020, and the comparative is for as of year end of last year. For the statement of comprehensive income and the statement of profit or loss were applicable for 6 months ending June 30, 2020. So meaning from January until June. Okay, kay 6 months man. Although it's quarterly, this is the cumulative version. Diba katong na ay cumulative income statement cumulatively for the current financial year to date. So meaning kutob karon nga quarter. So cumulative man, so gikan sa start of the year until i-cover nimo until karong adlaw or karon nga period. So of course, that will cover 6 months. And ang version pod sa last year nga kutob pod June 30 last year good for 6 months. Aside from that, i-present pod nimo tung para pod sa quarter. Ana ra pod nga quarter kutob 3 months. So this is second quarter. So, di ba, ang first quarter kay January, February, March, that's March, and then April, May, and then June. Okay, so therefore, April, May, and June, that's 3 months ending on June 30, 2020. And then for the comparative, that would be June 30, 2019 also. So that's from April, May, and then June 2019. Kay 3 months naman. Okay? So na cumulative January until June 30 sa current year, and then January to June last year. And then for the current year na po 3 months, that's April, May, and June. So that's until June 30, and then April, May, and June for 2019. For statement of changes in equity, although sa quarter siya, so 6 months ending, gihapon siya, 6 months ending June 30. So cumulative ang iyahang version. Okay, so for the cash flows. Dili maguna to pwede putlon ang changes in equity kay ano maguna siya ang iyang balance kay forwarded, di man pwede mo ambak ta nga December 31 yung pagkahuman igura na to i-add ang para sa April until June. Di man na siya pwede. Kay para maka-arrive ta sa balance sa June, kung statement of changes in equity na siya, magikan man na siya sa balance last year, and then sa January, apil ang January, apil ang February, and then apil pod ang March. Di man pwede nga ang from April to June lang ato hang i-add sa December. So sumpay man gyud na siya. Mo na nga 6 months gyud siya. So cumulative siya. Then also, kutob po June 30 of last year. For the statement of cash flows, the same po siya nga explanation. Kay ang cash man good, di ba musumpay naman na siya. So, ang balance niya pag December 31, maadan man na siya sa January, February, March. Unya, sunod na po April, May, until June. Di man pwedeng ang balance sa December, adan na nato sa cash nato nga nabayad or cash nato nga na-receive good for April, May, and June. Di man na siya pwede. Continuous man na siya. So that's why cumulatively ang statement of cash flows. The same with the changes in equity. Another example for quarterly, what if for the third quarter siya, dili siya for June. So the same, so statement of financial position as of the third quarter. So that's unsa may covered sa third quarter. So June, so July, August, September. Okay? July, August, September. But the statement of financial position, parehas siya itong statement of cash flow, so changes in equity nga dili pwede nga putlon nato nga good for 3 months na siya. ano man na siya, ang iyang balance kay running balance man, di man pwedeng ang balance sa December 31, 20, x 0 add na nato sa assets nga na receive nato or na-acquire nato pag July until September, di man, sumpay man gyud na siya ang iyang balance. So that's why cumulative gyud na siya kutob September 30, which is the third quarter. And then comparative, so ang requirement sa PS34 is dapat as of the end of the preceding year. For the statement of profit or loss, so magpresenta, 'di ba, ang requirement kay cumulative for the current financial year to date. So from January to September 30, but also we're going to present the profit or loss or the other comprehensive income nga good for 3 months. Nga naman kada ma'am kay pwede man lang good for 3 months kay ang income statement man good di man siya parehas sa SFP nga real accounts nga running balance siya. Ang income statement man good is pwede ni siyang mahimong independent per period. Okay? So, for 3 months pwede siya. So, that's from July, August, then September. Okay, July, August, September. And you are going to present the comparative version. So, ang same periods pero last year siya. Then, statement of changes in equity. So, 9 months. Again, to akong explanation earlier, dili pwedeng iambak or putlon lang nato kung pila ray assets ana kay ang assets nato karon or ang equity nato karon or ang cash flows nato karon is gikan man na sa balance sa pinaka-start yun sa day 1 sa atong operations. Day 1 until karong adlaw. So, running balances man na siya. So, that's why, although third quarter ni siya, 9 months atong ma-present. Kutob sa quarter nga covered. So, 9 months for the statement of cash flows. And then, we're going to present the comparable nga year. So, that is last year. So we have the entity shall apply the same accounting policies in the interim financial statements as are applied in the annual financial statements. So same lang gihapon ang rules and accounting policies. Okay? Then revenues from products sold or services rendered are generally recognized for interim reports on the same basis for the annual period. Costs and expenses are recognized as incurred in an interim period. Expenses associated directly with revenue are matched against revenue in those interim periods in which the related revenue is recognized, and those that are not associated directly are recognized in the interim periods as incurred or allocated over the interim periods benefited. So you need to determine if they are directly matched with the revenue. So you will know if i-recognize siya once the related revenue is recognized. If dili siya directly associated, then you can recognize the expenses when it is incurred. So dili siya magdepende sa revenue kay di man siya directly related, or you can allocate it over the interim periods. If the business is highly seasonal, in addition to the current interim period FS, the entity is encouraged to disclose the financial information for at least 12 months, then comparative information for the prior comparable 12-month period. The preparation of interim financial reports generally requires a greater use of estimation than annual financial reports. Then here are some of the recognition and measurement rules at interim period for some of the accounts. So for example, for inventories, same measurement will be applied as at year end. So therefore, you're going to follow the LCNRV or lower of cost and net realizable value. Inventory estimation can also be made using gross profit or retail inventory method. So for other considerations, full inventory and valuation procedures are not required. So, dili siya mandatory. If the net realizable value is lesser than the cost, the a loss on inventory write-down shall be recognized. And PAS 34 requires disclosure of the write-down of inventories to net realizable value and the reversal of such write-down in a later interim period. Then if there are dividends, revenue, dividends, royalties, or government grants, so these are seasonal, cyclical, or occasional revenues. The general rule is that it shall not be anticipated or deferred as of the interim date. Okay, if the anticipation or deferral would not be appropriate at the end of the entity's reporting period. So these transactions or these accounts are recognized immediately in the interim period when they occur. If there is provision of warranty, it is recognized at an interim date. Okay, because the entity has no realistic alternative but to make a transfer of economic benefits as a result of an event that has created a legal or constructive obligation. So this is under the uneven costs, wherein the general rule is the uneven costs shall be anticipated or deferred for interim purposes only if it is appropriate to anticipate or defer that type of cost at the end of the financial year. For expenditures for advertising, the rule is it is recognized as an expense in the interim period that it is incurred and it's not deferred. Okay, dili siya i-deferred. So, automatic kung nagasto na nimo anang interim period, so i-recognize na nimo. Then, for bonuses, so the general rule for the bonus is the bonus will be anticipated for interim purpose if and only if bonus is a legal obligation or past practice that would make the bonus a constructive obligation and you can estimate reliably the obligation. And in that case, that will be spread out over the interim periods. If in case i-anticipate ang interim bonus. Then, for irregular costs such as charitable contribution and employee training costs, okay, which are expected to be incurred irregularly, muna siyang irregular cost na siya. So, these are discretionary, depende sa entity. Sila magbuot kung kanus ama na siya mahitabo, mag-conduct ba na siya or dili, muhatag ba ta sa charitable institutions or dili, or mag-conduct ba tag training. So this is not anticipated as of an interim date, even though these may be planned cost. Okay? Because pwede man siya, pwede man siya dili magamit, di ba? Or dili ma-incur, dili siya ma-incur. So, dili mo siya i-anticipate. Then, we have depreciation and amortization. So, this shall be recognized for an interim period and shall be based only on assets owned during that interim period. So, this will be spread out over the interim periods. Asset acquisitions or dispositions planned for later in the financial year shall not be taken into account. For paid vacation and holiday leave, it shall be accrued for interim purposes because these are enforceable as legal commitments. So therefore, ma-recognize siya. Then, gain and losses from disposal of property or gain or loss from discontinued operation and other gain or loss shall not be allocated. Okay? Not be allocated over the interim periods. So they are recognized immediately in the interim period when the gain is realized or the loss is incurred. Okay, so di siya i-allocate. So kung na losses silbing dili mo siya ibahin-bahin kung kano sa siya nga period na hitabo, ana ra pud siya nga period nimo siya i-recognize. For the income tax, so it shall reflect the same general principles of income tax accounting applicable to annual reporting. Also PAS 34 states that the interim period income tax expense is accrued using the annual effective income tax rate applied to the pre-tax income of the interim period. Okay, you have the example in your book. Okay, so you have the tax rates. Okay, the tax rate for the first quarter is 30%. The tax rate for the second quarter is 30%. Then for the third quarter, it is 25%. So what would be the computation of the income tax for each quarter? So the first quarter, since the tax rate during that time is 30%, during that first quarter, so 30% of 5 million. For the second quarter, so you follow the tax rate for that quarter, 30% of 6 million nga income before tax. So in the first two quarters, you already recognize 3,300,000 nga income tax. But in the third quarter, since 25% naman ang atuang tax rate, so i-compute na to ang 25% for the cumulative nga income based on the cumulative income before tax. So, pila man tong cumulative until the third quarter, that's 19 million times the new rate nga 25%. So, the correct tax as of third quarter would be 4,750,000. Since na naman tayo recognize for the first two quarters nga 3,300,000, so for the third quarter, ang ato ang income tax expense nga i-recognize is 1,450,000. Then for costs and expenses or income that benefit the entire year or are incurred over the year, such as property taxes, insurance, interest, 13th month, they are spread out over the interim periods. Then, if there are changes in accounting policy, it shall be reflected by restating the financial statements of prior interim periods of the current year and the comparable interim periods of the prior financial year. So, this requirement is intended to ensure that a single accounting policy is applied to a particular class of transactions throughout the entire financial year. So, to allow differing accounting policies for the same class of transactions within a single financial year would result in interim allocation difficulties, obscured operating results, and complicated analysis. Of course, pag lahi-lahi ang policy gigamit, so maglisod jud ta og sabot sa interim nga information and also make informed judgments. So therefore, a single accounting policy should be applied to a particular class of transactions throughout the entire financial year. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.